I think we all have to start looking, not near term. We have to look at longer term. Now, this is Euro Financial ETF. Okay? Can you see the chart now?
Okay, so this is European bank stocks, basically.
Yes.
Okay.
That's a 2-year high right now as we speak. That's a 2-year base. I think it was August of 2011 it started. We're breaking out of that.
Okay.
Hello.
And is it
Hello.
Is it
That can't be bad.
And it's crossing above its 50-day moving average and about there above its 200-day moving average, yeah?
You got it.
Okay.
I'm looking at stuff. See, there's too much noise with this daily gyration. When you step back and look at weekly and monthly bar charts, here, for example, let's do the CAC, CAC. Let's look at the CAC monthly. No, is the CAC monthly? No. Weekly, I think it was the chart that showed me. Wait a second. Where did I get? I'm getting hit here. I did the wrong chart. Here, look at the CAC. Can you see this chart?
Yeah.
Looks exactly like the other one. We just looked at it. It's, as we speak, it's taking out its March 16th, 2012 high right now. It hasn't been this high since August of 2011. And we went through the last 6 months of this correction. Who was saying it was a head and shoulder top and all that sort of stuff? I'm saying, yeah, well, we like the longer term. And I wasn't so excited about the CAC. The DAX is kind of like that.
Okay.
In the United States, let me see, XLF. Let me show you this beauty. This is the XLF. This is the financials, okay? Can you see this chart?
Yeah.
Yeah. Look at that huge decline. That was 07, 08, okay? Banks got crushed. In the last 3 years, we've been sitting here. I think the XLF is about to have a massive multi-year breakout. And everybody's complaining you can't have a bull market unless you have financials. Well, we did pretty well the last couple of years, only up 100% in the S&P. And now I think the lifeline of every bull market is rotation. I see rotation into the financials. I see rotation into healthcare. Well, that's been strong anyway. Consumer discretionary, industrials.
This chart here,
look at the automobiles.
Is that US? Is that US financials or global financials?
Yes.
Or European?
Yes. I showed you the global financial, the EU FN before, and this is US financials. Yeah.
Okay.
Look at it. Yep.
So this is a
so,
short.
When I step back and I see these long-term pictures, I'm saying to myself, sure, there could be corrections and lots of noise and stuff, but I think the structure of this move is very, very positive.
Okay. And are there any other indicators you use? I mean, you're looking at this, you're using mainly just kind of trends and moving averages, aren't you? Is there anything else you use? Yeah,
the 80 line. It got crushed. We were looking for a correction in October. No big deal. I wasn't looking for anything. But when it got crushed in October, November, I went into the fetal position and said, oh, my God, they're really doing damage to the utilities, the technology. And I mean, it was really, I was still holding on being bullish, but I have to tell you, I was breathing hard because that was a real nasty breakdown. And look what happened in the last couple of weeks. It rallied right back.
Can you bring the full chart up for that? This is the AD line for the
New York Stock Exchange.
Yeah. What's the time scale? I can't see the bottom axis on this actually. Is that?
Here. This is daily. Can you see the down? It's September, October, November. You can see they made the low in the middle of November, and now here we are, a couple of weeks later. It's shocking on the downside. It's equally shocking on the upside. And I'm saying these are the internals of the market in the U.S.
Yeah.
And here we got so many European markets. The UK is very close to making a new high. And I'm saying to myself, and you know, and we're all being bombarded by all this negative news and everything. And I think the markets are telling us something much, much different. Much, much different.
This the
I
AD
believe
line,
that the March 2009 low, the March low, was a generational low. I compare that to August 1982. I think that's when we bottomed, the world bottom. Unlike the Elliott wave guys, I think the world's going to come to an end. I totally disagree with that. And I'm not naive enough to say that we can't have bear markets or recessions next year. You know, this rally here has to be a damn good one. We got to see new highs in the tranny and the industrials. You know, get the Dow theory and everything. You know, all that stuff. We need that. But I'm saying the odds are we could really have a good one here.
But the daily, this chart we're looking at, the daily AD line, that's quite a short-term kind of leading indicator, isn't it?
Yeah.
I mean, if you look at a weekly or a monthly AD chart, what would...
I don't have it, but it's just as good. I could get it for you.
And how reliable would you say the AD line is as a leading indicator? I mean, you obviously trust it.
How reliable?
Don't you?
Well, it's one of the things you look for to see participation. All I know is the market had a very nasty correction, albeit you couldn't, you know, I think it was down, the S&P were down like 6-7% from top to bottom. There's nothing. But under the surface, there was, well, you saw what happened to Apple, down 22%. So a lot of that, I'm saying, the correction is over, and it looks like we're on our next leg up. I think the Dow's going to an all-time new high.
In terms, when you're talking about the forecast you just made, have you got any kind of time scales? I know it's difficult to kind of pin this down, but we're talking about in the next kind of 2 years, something like that, I suppose, are we?
That we could still do 20,000 next couple of years?
Yeah.
Is that what you're asking?
Yes.
I'm going to say yes to that, but I don't know if it's 2 or 3 years, but I think it's doable, yes.